Hello and welcome to CFRA's Thematic Insights, where we explore the market trends and investment themes shaping tomorrow's opportunities. My name is Aniket Ullal. I head up ETF research at CFRA, and I'm joined today by my colleague Matt Miller, who heads up our materials sector research. Welcome, Matt.
Hello, Aniket. Thanks for this call. I hope we can highlight some important trends and investment opportunities for our clients.
Great. Thanks for joining me. Let's dive right into gold. That's a sector we got a lot of questions about. Gold, along with a few other precious metals like silver, has been one of the best performing asset classes in the last year. So, what's your take for the rest of the year? What's CFRA's outlook for gold for 2026?
Yeah, indeed. Gold did deliver exceptional performance. Last year is up 45% year over year. When you look at the 2025 average of around $3,480 an ounce versus a 2024 average. And CFRA maintains a positive outlook for 2026. We're forecasting gold to average around $5,000 per ounce. And again, that would represent about a 44% tailwind for gold miners. You know, there's several factors that kind of support this bullish view: heightened geopolitical risks, currency debasement concerns, and structural diversification, mostly by emerging market central banks away from the US dollar and other fiat currencies. President Trump's trade policies and concerns over the Fed's independence, we've already seen that those concerns kind of push gold to historic new highs last week above $5,300 per ounce. It was a volatile week, however. It took a major dip around 10% last Friday when Kevin Warsh was nominated to lead the U.S. Federal Reserve. And he's known more as a hawk and not a dove. He's been critical of quantitative easing, and that's the reason for that. We do kind of expect consolidation and investors to kind of divest this development. We fully expect the bull run to continue in 2026, however. And we've already seen the last 2 days gold bounce back. It's trading above $5,000 an ounce now.
Yeah, that's certainly interesting. If you look at it from an ETF perspective, spot gold ETFs took in about $50 billion in 2025, which is a lot. And, investors were rewarded. If you look at GLDM was up about 65, 66%. I think the question then is going forward, if we're so bullish on gold and we think these structural supportive factors are still in play, why does CFRA have an underweight on materials? Maybe walk us through some of the logic of that reasoning.
Yeah, it's a great question. I mean, while we remain bullish on specific metals like gold and copper, we remain underweight stance on the broader materials sector. And this is mostly due to persistent challenges in key chemicals and certain packaging companies. On a market cap weighted basis, the larger chemical companies that dominate the sector really don't excite us that much. And we have neutral to negative calls on most of them. Meanwhile, many of our highest conviction ideas are smaller cap names or companies listed outside of the major US indices. For example, we're covering most of the major gold miners. However, there are only 2 of those that are in the S&P 1500. The rest of them are trading on the Toronto Stock Exchange. So for materials, we'd recommend being cautious on the sector as a whole, looking for specific opportunities. We do like precious metals. We also like copper, and we like MP materials. So those are the ones we'd highlight there.
Yeah, we recently published an ETF thematic note looking at this, and it's really consistent with what you just mentioned. If you look at XLB, which is the large cap US materials sector, chemicals is 50% of that ETF. So it's not just, and metals and mining is only 20%. Whereas if you look at MXI, which is the global sector ETF, metals and mining is 50% of that ETF. So at CFRA, we really emphasize looking at the ETF's underlying holdings, understanding the exposure, and then linking that to your overall view of the market. Matt, just looking ahead to 2026 more broadly, what do you think are some of the trends or factors investors should consider when looking at the materials sector?
Yeah, I think there are 4 critical trends in 2026. And the first one, specific to copper and looking at the supply-demand dynamics there, any major mine disruptions or delays more than what we've already seen in sort of the new capacity could accelerate the supply deficit that we're forecasting. And that could potentially drive the prices even higher. And they're at record highs today. Second, track the central bank gold purchases and U.S. real yields. These remain the primary drivers of gold demand and pricing. And third, I would monitor China's policies on the property sector recovery. China's actions significantly impact global markets and overall materials demand. And finally, keep an eye on trade policy developments, particularly regarding tariffs on metals and stockpiling news on critical minerals as well. So I think that these trends should be the main drivers for materials sector performance in 2026.
Yeah, I think that's great insights as always, Matt. I think this is a sector we're going to be talking about more often. Investors are certainly paying attention to it. For more insights from CFRA, please visit cfraresearch.com. And thanks for watching.